Good evening, traders and investors. Will back here with another one, coming to you with a Monday market recap. Hopefully you guys had a very nice day in the markets today, and hopefully you had a beautiful weekend as well. And in today's action, the S&P, the Qs, and most of your major market indexes were pushing substantially higher. No new all-time highs for the S&P and the Qs, but very close. And with all this very bullish momentum, especially in a lot of tech names, a lot of growth names as well, it raises the question, are there still some good opportunities in the market? And we're going to be spending a lot of time on that today, identifying some opportunities that are lingering around in the markets, and even for some of the growth names that have been pushing, are they still some good deals? Now, in terms of today's video, we got a couple things to do for you guys. In terms of the first part, we're going to be looking at our technical analysis rundown since there's no real news to cover today. So we'll just jump right into the charts. We're going to be covering our technical analysis rundown on our major market indexes, the SPY, the Qs, and all of our subsectors, see where the rotation is and see where the rotation is a bit lacking, and maybe where we could possibly position therein. And thereafter, we'll be looking at our technical analysis portion of the video for our big tech list, because we know a lot of these names have been running fairly well, but some are still lagging a bit behind, which is somewhat of an opportunity, especially on a lot of these names in this list. Thereafter, guys, towards the end of the video, we'll be going through everybody's favorite section, which of course is the biggest gainers and losers of the day section. To the upside, we had so many companies pushing 5, 6, 7+%. We'll take a look at those. And then to the downside, we also had some other companies pushing down multiple percentage points. So we're going to be trying to establish whether or not some of these companies pushing down are just traps and we should avoid them, or might they just be decent opportunities. And at the very end of the video, of course, I'll be taking you guys through my portfolio and some of the new positions I acquired today and what I will be holding throughout the rest of the week. So should be a very fun video, and since we don't have any news, we'll be spending a whole bunch of time on the charts today, so hopefully you guys will enjoy. Let's jump right into the action, shall we? The S&P up 0.28, the Qs up 0.46. It was a very nice broad day of market performance today. You can see that no real major sectors were left behind, except maybe for energy, but not too many people play that. Tech, not too bad here, guys. Even though Broadcom was down, we had a nice counterbalance coming in from NVIDIA and a lot of other semiconductor plays. Microsoft, Amazon, Tesla doing well. Apple, Google, Meta coming down ever so slightly, but these charts are still looking very good. I don't particularly see any red flags coming up in the near term, short term. In terms of financials were doing well. We had some recoveries from the credit cards, which we know have been lagging behind maybe some of the banks. So we'll be taking a look at the financial sector a bit later in the video, identifying some of the lagging opportunities that can be found within financials, because I do believe there's some really good ones if you know where to look. Healthcare, not too bad of a day, recovering from last week's drawdowns. And the bottom half of the market, which is also known as the interest rate sensitive segment of the market, also participating to the upside, as we did see a downswing on the 10 and 20-year yields today. In terms of the one-day relative, you can see that even better to where most segments of the market were pushing higher today. Very nice. The only one that was kind of lagging a little bit behind was, of course, energy. On the one-week relative, since we know that it was a very choppy week last week, several big down days for some technology stocks, and then a slight recovery into the Friday session, well, we're kind of balanced right now. Energy, utilities, materials, real estate, cyclicals, all to the upside. To the downside, still some very major sectors, financials, healthcare, technology, still on a one-week relative basis in the red. So that being said, guys, in terms of the technical analysis, we're just going to jump right into it because, as I said, there's no news, and there won't be any news much until tomorrow, Tuesday, whereby we get the JOLTS jobs openings report. There's a few key jobs reports to pay very close attention to this week. The first one, of course, is going to be tomorrow. This is going to show how many new jobs are still available in the economy. And thereafter, we get into some more spicy stuff. On the Wednesday session, we get the ADP employment change. That is your private payrolls. We know that these have been somewhat weak over the course of the past few months. And since the jobs, all the jobs reports are going to be front and center, because we know the labor market right now is a little bit weak, let's be honest. As we also heard from the Federal Reserve a few weeks ago, they were saying the same thing. So this report on Wednesday is going to be a big one for the markets, and additionally, the big one on Friday, guys, your non-farm payrolls, and that comes coupled with the unemployment rate. The non-farm payrolls are supposed to come in at 39,000 net new jobs in the public sector for the economy, which is not that strong, but still an upswing from the last month's report, which only saw 22,000 jobs added to the economy. Unemployment rate is supposed to stay at a no change 4.3%, which is a historical low. So if we had a couple things to pay attention to this week, guys, it's going to be all of these jobs reports, and we know that the focus right now is indeed on jobs, not so much on inflation anymore. The Federal Reserve has kind of said that inflation is a one and done thing from the effects of tariffs, and now the focus, the balance of risks, have shifted over to the employment market. So a lot of these reports will be very clutch in terms of price action in the short term. Obviously, if these reports are negative, we can see some pretty decent pullbacks across the board here. And if the reports are decent, well, the markets might just continue on pushing towards the all-time highs. The early parts of the month of October can be a bit choppy in terms of seasonality, but towards the end of October, we start getting into earnings season again. And with last earnings season wrapped up, we obviously know that 80% of all companies in the S&P 500 reported positive earnings surprises in terms of revenue and in terms of EPS as well. And they did provide good guidance for the upcoming quarter. So earnings season should be a good one. And that then carries us into the November and December seasonal rallies. It's been a very fun market, especially since the April lows. I know some of you guys have made an absolute ton of money, but even if you haven't, there is still some time left in the year and still some fantastic opportunities in the market that we'll be taking a look into very shortly now in the video. So let's jump right into the technical aspect of it all, and we're going to start off with the S&P. Well, the S&P, not much has changed, guys, in terms of price action, right? Very clear daily uptrend is currently being protected by the bulls. We almost lost it last week when we almost flushed the 654 higher lows. That is still your line in the sand level. If you break this level without any new all-time highs, it's going to be a daily downtrend, and it's going to be a little bit of weekly consolidation. But if this weekly chart shows you anything, it should just be that the bulls have an absolute ton of space in this weekly uptrend for a bit of a pullback, and also several decent support levels to pull back into. The first of which is 650 all the way down to 646, and the second one is 639 to about 635. So the bulls right now on the SPY in full control. It's nice to see that we're getting continuous rotation between the sectors, but also within certain sectors. It's not only the same concentrated names pulling up the market. Really, the market is looking a lot more broad than it was perhaps 2 months ago. Moving on to the QQQs right now, kind of the same analysis, although the daily higher lows are a bit higher on this one. Line in the sand, 588.33. Lose this level to the downside, you end up with a new daily downtrend and possibly into some weekly consolidation similar to the SPY, but the same analysis stays true. We are just looking at that point for a very nice weekly higher low, and your closest area of support would be down here, 582 down about 575, in line with the 12 EMA as well. So right now on these charts, really, there's no red flags. And even if we do sell off a bit, I do still believe it's a fantastic opportunity to buy some dips in the market, as most of our macro is looking pretty decent. GDP is very strong. We saw that last week. Unemployment, at least we'll see if unemployment remains low at the end of this week, but it is at historical lows for the time being. And inflation right now is just not a problem. If you take a look at the Truflation inflation gauge right now, which in my opinion is a much better gauge than the CPI or perhaps the PCE, because it measures 15 million different products on a daily basis with 30 million different price points, it's only at about 2%. Now, this evaluation is probably a lot more representative of the amount of inflation trickling into the economy from tariffs, because this measures far more goods and far more services. And as you can see, the inflation rate posted here is only about 2%, substantially lower than the reads that we're getting from the CPI and also from the PCE reports as well, which probably is some of the reasons why we're seeing some very decent consumer spending numbers and some consumer savings numbers as well. Those numbers came in last Friday, whereby we saw some very nice personal income, right? 0.4%, and personal spending 0.6%. Of course, we didn't see each other on Friday, so I figured I should give you those numbers now. But that is why, in the event we do get some pullbacks on the indexes, still a big fan of going shopping for some of our favorite companies, possibly into some oversold levels and or support support levels too. Now, moving into financials, one sector that has a lot of good deals into it right now, if you know where to look. Financials, if you look at the ETF, it's kind of just consolidating sideways, not doing much of anything, at least over the past month. However, the trend is very clear. The bulls still have full control of this chart. We're just looking for possibly a nice weekly uptrend breakout. It's looking really good, guys, getting really tight at the top right here, protecting the below support level, 53.30 down to 52.80, and also protecting this 12 EMA. The bears have had many chances to flush this level, just haven't been able to get it done, and that's because we're seeing some very nice intra-sector rotation. So what I mean by that is your banks are very strong. JP Morgan, Bank of America, companies like Wells Fargo as well, very strong and pushing highs. However, some names that have been down are now starting to rotate up a little bit. Names like Visa. Visa in the financials landscape is probably one of my favorite bets in the entire market right now. This is just very natural consolidation. It's been doing a whole lot of nothing if you take a look here on the monthly chart for what? The past 6, 7, almost 8 months at this point, bouncing beautifully into the 340 to 325 support zone. And every time Visa comes down into its monthly 12 EMA, at least in the context of a bull market, because this was the 2022 bear market, it tends to be a fantastic buying opportunity for this company, at least when you look back over the course of the past 15 years. So this is definitely one of my favorite plays in the entire financial landscape right now to possibly go shopping for. Some other plays in the financial landscape that are at very attractive levels are names like SPGI. Some of these credit rating agencies, which have a whole bunch of debt to re-rate essentially for other companies in the next few years, they'll be getting a lot of money from that aspect of their business. The analytics portion of this company's business has been doing well, and also the indices portion of the business has been doing well as well. Of course, they own the S&P and they own the Dow Jones suite of ETFs. This one pulling back into here, guys, 480 down to 460 is indeed a very beautiful opportunity. The same prices as we were finding possibly at some point August of 2024. The prices are back there again. Phenomenal pickup, in my opinion, for especially a long-term portfolio. Even a company like Moody's Corporation coming back down into its own support levels, 470 down to 449. Very attractive, same levels as we were seeing last fall of 2024. So there's a decent amount of opportunities all across the financial sector right now if you know where to look, and it doesn't have to mean only the banks, right? Moving on to XLV right now. XLV up 0.3%, trying to recover a little bit of the Thursday's losses. They've almost recovered the entire portion of Thursday's losses. Now, the daily time frame is very choppy. Of course, right now it is still in the context of a daily downtrend, and we want the bulls to kind of reverse the price action right here. The weekly time frame as well is somewhat a bit choppy, but I'll show you guys what we're looking for here. The bulls are just looking for a bit of a basing effect, right? At the top end of this resistance profile right there, previous resistance profile, because now it's support 136 down about 135. Essentially what we're looking for here, guys, is we're looking for the ever elusive monthly trend expansion back to the bulls, back into the high 140s, call it 145 up to about 148. XLV has been lagging pretty hard. There's some good deals across the entire healthcare sector right now, but even if we just wanted to buy the ETF as a whole, I think it's a pretty good strategic buy right now, considering the fact that we're at the 50 monthly EMA, and we very rarely test that. Going back from 2011, you can see how many times the market has tested this EMA, and it's held up pretty well every single time. So I do still think it's a phenomenal location to be building some healthcare positions, either individually, if you guys want to play companies individually, and or the ETF, which is what I'm doing myself, just playing the ETF. Now, moving into everybody's favorite sector, we're going to talk about semiconductors. So semiconductors, decent day of performance today, brand new all-time high on the SMH, but not pushing up too much. That being said, who's in control right now? Of course, it is your bulls. So the new higher lows are set at the lows of last Thursday, around 313.58. If you flush this level without any new all-time highs, it will be a daily downtrend, and once again, you will be going into a bit of weekly consolidation. And in the event that that does happen, is that such a bad thing? Not at all. We'll be coming right back down here. 300 to about 295 is your most recent prior resistance range, which will be newfound support, and the weekly test of the 12 EMA. The bulls are in complete dominance mode in terms of semiconductors right now, but you got to pay attention. The ETF is getting a little bit overbought. However, within semiconductors, there are still some very decent opportunities. My favorite favorite of which right now, of course, is AMD, because we know a lot of other companies have pushed up really substantially in the past few weeks. ASML, massive rally. If we get a pull back down into here, possibly the mid 800s, I'll be a big fan of playing this one again. Companies like Micron as well, pulling way ahead of itself right now. If we do pull back somehow into the 140s, 130s on any semiconductor consolidation, I'll be a big fan of playing that one down there too. And even NVIDIA, which we'll take a look at later on in the video, if we pull back again to the whole 170 to 160 support range, could be a very decent opportunity right now for a lot of pullbacks on these companies that have ran an absolute ton, but semiconductors looking solid right now. No red flags currently in that aspect of the market. Moving on to the Russell right now. The Russell not looking too bad, but also a bit of choppy price action right now. The bulls had the uptrend, and now we have a pretty decent downswing on our hands right now, right? 237, 237.50 roughly is your line in the sand. Crack that to the downside without net new all-time highs. You're looking at a daily downtrend, and once again, you will just be looking for a weekly higher low. Now, I have been scouting this weekly higher low for a while, and if it does come back down here and pick me up, 232 down to 225, I would be a big fan of participating. However, if we don't want to wait for that, there's also another way to position, which of course is the dollar cost average method. If you're looking to build a position in the IWM Russell for the growth plays, considering the fact that rates will be coming down over the next 12 to 18 months, and you want to participate in this sector, which has been lagging behind the markets pretty severely, right? We're barely cracking above the all-time highs set all the way back in 2021. So safe to say that this aspect of the market has a lot of catching up to do. That being said, we can build some positions from here all the way down into our support range, and those positions probably should be carried over the next 12 to 18 months to really let the growth thesis expand. But overall right now, the bulls not looking too bad, looking quite strong. Still a very decent play in my opinion. Shouldn't be done with the entire portfolio, of course, but a bit of a position into the Russell, into some of the small cap names, not the worst proposition at hand right now. And that's everything for your sector rundown. Actually, since we have a lot of time today, let's do some of the minor sectors here. Consumer staples, XLP, decent bids down here. I know it's not the sexiest play, it doesn't move the fastest, but it's a very decent balance, right? If we want to position in this to kind of counterbalance maybe some of the high or fast-paced growth names that we would have in our portfolios right now, I think this is a phenomenal area to be selling some puts on XLP or possibly even positioning in for some longer duration calls. It doesn't move that fast, but as I said, it could provide some good balance to a tech or growth heavy portfolio right now. 78 down to about 76 is your support range, and that's the resistance area from 2021 through 2022 and all of the support from 2024 through this year as well. It's a very solid level in my humble opinion, and it's very rare that you will find the XLP close to daily oversold conditions, something that it's in right now. So building a bit of a position here just as kind of a counterbalancing weight to some of our other tech heavy holdings, not the worst proposition in my mind either. XLU to utilities, looking very strong, guys. Utilities is one of your sectors that has to be watched, especially in terms of the electricity plays, obviously for the data center purposes. Now, the company that I've been looking into a lot, guys, is going to be Vistra right here. Phenomenal company in my humble opinion, and it's been coming down about 4.48%. Now, this chart does not look like other energy charts such as Oklo or such as other very hype plays out there, but what it is, the very solid player in natural gas, nuclear, solar, and even battery storage. It's been consolidating here for a better part of the last, 3-4 months, and this one is definitely front and center on my watch list because the valuation is not too commanding, and they will be expanding their revenue and EPS profile quite well over the next few years. So this is probably one of my top plays in terms of energy, right? Beautiful expansion on EPS and looking for a very nice expansion on revenue as well. Definitely one to watch in my humble opinion if you're looking for something in utilities, and even something like a Next Era Energy, right, has really been basing out here 70 all the way down to about 63 bucks. I know it hasn't been doing much of anything, but it is the #1 wind, solar, and energy storage developer in the world at this point. They have skin in the game for almost everything. So this is another play that I'm paying very close attention to in the electric utility space. Probably my two favorite plays moving forward that haven't ran as much as some other ones. So pay attention to those if that's something that might interest you. Moving on to real estate right now. Real estate has just basically been doing a whole lot of nothing, right? But that's good because if we're looking to position, there's possibly still some time left on the table for us to build those positions on our favorite real estate names. Balancing out to support right now, 41.50 down to about 39. Beautiful area, guys, of consolidation, accumulation, possibly before a nice rally into 2026 with the declines of some interest rates. Now, you could either play REITs or you can play some of the mortgage companies like I've been playing Rocket Mortgage on some pullbacks. Very interesting play there, but also some of the home builders, right? XHB, names like ITB, which is the home construction ETF as well. Not looking bad in that respect too. This is the pullback that we've been waiting for, right? It's been pulling back now for about 3-4 weeks. We're just looking to set some beautiful weekly higher lows for the bulls, possibly looking for the expansion. The clearest time frame, in my opinion, has to be the monthly, right? 9 months of downside. And now we had a bit of front running for the interest rate declines. And now we're looking for the monthly higher lows for possible and further trend expansion. So the home builders, probably one of my favorite spaces, guys, to allocate a little bit of capital moving into the next 12 to 18 months. We literally just had the best new home sales report that we've had in over 3 years. The report came in just the other day, and it's showing that the real estate market is doing something like this, right? All of 2022 into 2023 into 2024, real estate market was declining, very soft because interest rates were high, and it's still a buyer's market. In my opinion, we are like here in the stage of recovery, right? It's a very long market cycle in terms of real estate, and I do believe it is currently on the upswing, but a very long upswing, right? That being said, that's everything for your index rundown. In terms of the VIX right now, the VIX surprisingly up 5.36%, but for no news whatsoever, right? But still, where's the VIX right now? In or around some of our low areas. So in my opinion, it's still a very nice opportunity to be picking up some leap call options on some names that have been left behind, some names with a bit lower volatility. And that being said, if the VIX spikes up, you guys know the drill. Always a fantastic opportunity to be selling some options. There was one day last week, right? Last Thursday where the VIX spiked up to almost 18. We are finding some phenomenal short put plays in the Discord group with some great distance below the current market prices. So whenever you see these volatility spike events, you really want to make the most of them, especially if you're selling options, either puts or calls on some of your holdings as well. In terms of the yields right now, the yields not doing quite much, but we are getting rejected here at a very key area of resistance. 4.2 down to 4.1 is the range on the 10-year yield that you should be paying attention to right now. The downtrend is very clear. It's not going to be a, it's not going to be a very smooth path. It will be somewhat of a bumpy path back down here on the yields, but I do think that the path right now is confirmed. The 20-year yields as well, balancing out right now from our range of resistance, which is pretty much 4.75. Done about 4.68. So we're just looking for a continuation of the yields downtrend, which in turn will lead to the continuation of the bonds uptrend. This has been a very nice trade for an accumulation period for a very long time. Call it the past 3, 4, 5 months at this point. And now we have a very clear uptrend and the bonds are looking for a bit more. Your first area for taking profit on any buys made down below here is coming up quite shortly. 91 up to about 93.5 is take profit area number 1 for any call options. And then take profit number 2, of course, has to be the big one up here, roughly around the $100 psychological mark on TLT. Now, moving into another asset that's just been booming recently, gold. Gold up another 1.97% on the Monday session, and look in the after hour session right now, up another 0.81%. Now, there has only been a few of these types of rallies in gold's history. You can see one back here in the 1970s, one here from about 2004 all the way through 2011, and now we're getting number 3, which started at the lows of October of 2022 and now pushing exponential highs. But I want to run you guys through a few of the time frames here. 3-month time frame right now, very overbought. It's an 87 on the 3-month time frame. On the 1-month time frame, gold has now hit a 90 RSI. Gold doesn't do that too often, guys, on the 1-month time frame. Matter of fact, during this entire rally back here in the 2000s, it did not hit a 90 RSI once. The only times we've hit that prior are sometimes in the early 1970s, and then thereafter, one time here at the peak of the run in about 1979. So keep that in mind. We're not working with a lot of historical data, but we are definitely very overbought right now. Gold is just moving exponential. Positioning up here, in my opinion, is very risky. The risk is definitely to the downside at this current time. The weekly time frames overbought, and now the daily time frames deeply overbought as well. So gold just continues to pump higher, but as I say, as the more and more it pumps, the riskier it gets to actually start chasing this trade. Any consolidation moving lower, we'll just be looking for a new higher low, guys. At this point, anything above 37.21, looking for a new higher low, possibly for further trend continuation. So if you guys are day trading this one or things of that nature, that's fine. But longer term swing positioning here in such overbought conditions on such an extended move from our breakout period is probably not the best thing to do, right? At least it's just not prudent and it's not replicable. Now, the trade was basically building an accumulation period back here. We were talking about it a bunch on the channel back here, to where any swing trade longs built down there off the basis that the bulls were protecting the 12 EMA and holding on to the monthly timeframes with a stop loss down below there could be quickly rewarded, and that's exactly what happened. Very nice price action for the bulls right now, but in my opinion, extremely hard to position for any longer duration swing trades. So keep that in mind. Moving on to Bitcoin right now. Bitcoin, decent little recovery. They had a big sell-off last Thursday, almost 4%. And now, over the course of the weekend and the past couple trading days, we've recovered most of all of it. So that being said, the bears were in control. The bulls have a very nice engulfing move on the daily. We will see if they can actually capitalize on this and change the trend and start attacking our resistance range, 117 up to 120. That being said, who has always been in control of the weekly time frames this entire time? It has been the bears, right? Lower high, and now the bulls saying, no, you guys are not going to get a lower low. The bulls are trying right now for the weekly trend shift. Why is that important? Because this entire time we've been looking for monthly consolidation into our support range down here, 107 down to 100. I was very firm in saying every time we make it close to 107, I'll either be accumulating some long positions and or selling some put options down here. And it's been a very lucrative thing to be building some further positions in that location. So Bitcoin right now looking good, still not having expanded truly just yet, but just accumulating sideways, right? Waiting for those larger time frames to kind of come into play here, possibly into Q3 and maybe even early Q4. So keep that in mind. Q4 is usually a very good period of time for crypto in the markets. Moving on to Ethereum right now. Ethereum down 0.41%, and they're just trying to recover a little bit of the damage that's been occurring over the past few weeks, right? So the bounce is okay, but in terms of the size of the bounce right now, it's not the best bounce, let's be honest. It's about a 50% retracement size. It's created some space off the lows that the bulls can kind of use and try and reset the daily uptrend. But one thing that was very clear is we got rejected here into support, 4,000 down to 3,700, as we've been calling on the channel here this entire time. We were saying that I'd be looking, if I wanted a position here, I'd be looking for a back test into this location. It just made perfect sense. It was the previous range resistance highs, and now currently acting as some beautiful support. So although the bulls have lost the weekly uptrend, any bids down here, I do believe, is the best location to possibly be rebuilding some Ethereum positions that we may have taken profit on all the way back up there. As at the end of the day, all we're looking for here, guys, it's a cup and handle, right? It's a breakout retest. You can view it as a cup and handle if you want. Very nice monthly price action. So in the event we revisit this location again, I'll probably be revisiting some of those Ethereum buys once more. And that is everything for your overall market rundown. Hopefully you guys enjoyed that. Now we can dive into some tech charts. All right, as usual, starting off with good old Apple. So Apple down about 0.4%, but that's okay. They've had a pretty nice rally off of the support range right here, 236 to 226, and the bulls might just be looking for a bit more. Line in the sand right now is definitely the lows of the last Wednesday candle, 250.86. If you break that low right there, you're looking for a bit of daily downtrend to just consolidate these weekly timeframes a little bit, and that would be a very healthy pullback for Apple in my opinion. In the event bulls go for more, we're looking for the crack of the 260 previous all-time highs. Apple right now, no position for me. It's a little bit too extended. There were several opportunities for some swing trades. One was right here, and then the other one was down here with us on the channel. As at the current time, No swing trades for me. Apple's a little bit too extended, so no short puts. It's a bit too far away, and also no swing trade longs as it's very extended right now. Apple has been putting up some pretty good numbers for the iPhone 17 sales, and as a result, the market has been giving them a nice little bonus here in terms of a share price bump. Moving on to AMD right now. Now this, in my opinion, is a very nice opportunity right now in terms of our big tech list. So keep in mind, we're currently still rejecting from resistance 171 down to about 157. The entire time it's down here, it's been a very nice area to accumulate some possible shares and or some call options with some long-term expiries. That being said, in terms of the weekly, we are still consolidating on the weekly. The bulls are trying to go for the weekly uptrend shift. However, if we break these lows at 149, it will officially be a new weekly downtrend. Why? I'm not concerned about that, guys. Down here, huge support. 147 down to 133. Every time we make our way towards these lows, I'm selling put options down here. I've also built a leap call position in this location because what I'm anticipating, guys, is on the higher time frames for eventually the bulls to come roaring back alive. This is a very nice engulfing move. Cup and handle pattern formation, perfectly backtesting a beautiful support range, and now we might just be looking for another leg of expansion. We have to be patient for it, but I do believe it's coming. The company at around 150 is, in my opinion, very fairly valued. 1.3 peg right now, an 8.45 price to sales, and tremendous growth in the future in terms of revenue and EPS. So AMD in semiconductors right now, if I'm looking for something that can move fast and possibly explosively, AMD is probably front and center for me as of right now. It used to be plays like Micron. Micron has already fulfilled that trade, right? It used to be ASML as well. ASML has also fulfilled that trade that we were building down below the lows. And now I do believe it might just be AMD's turn as well. Moving on to Amazon. Amazon, probably my favorite name in all of big tech right now because it is the name that has been lagging behind. You guys remember year-to-date performance? It seems like it was just yesterday, right? But actually it was about a month and a half ago at this time. I was referencing the fact that Apple was down 16 to 20% year-to-date when everything else was flying. It was a phenomenal trade opportunity. Now it's played out. Apple's rallied like 20% in the last month and a half. Now, there's no more juice left in that trade. Google, we talked about this one several months ago to where it was one of the cheapest valued stocks in the entire market, especially for the quality of its competitive advantages and its moat. Now, that one is history as well. Google is currently up 28% year to date, but for a long time, it was not. I do believe now, guys, it's Amazon's turn. Amazon hasn't really suffered. It hasn't really been down year to date, such as Google was, such as Apple was, but it just has not been performing, right? As we can see, we're currently still the same prices that we had earlier on this year. The price action, though, is looking quite good right now. We are back testing the bottom end of support down here, which is currently 227 down to 220. A nice secondary level down here, 212 down to 206. If we need to pull back a bit more, the trend right now on the weekly has been lost. It's very choppy, but one thing that's very clear in my mind is the monthly time frame, right? Very nice engulfing move. Same thing. It's a cup and handle on the monthly pattern, right? Very gorgeous price action on the longer time frames. So although some people might be getting chopped up by this daily and weekly price action, if you just zoom out, it becomes very clear what's going on here. It's an accumulation period, and I do believe there will be a very nice pop and rally to the upside on Amazon eventually. So as such, I am building some positions in this location right here. I've been very firm in saying Amazon, probably one of my favorite opportunities for leap call options right now and or building some significant shares for long-term portfolios, but also on these dips, not a bad opportunity to be selling some put options under the market. So we really have every single trade type under the sun to be playing on Amazon right now, which makes it one of my favorite companies, both for long-term investment purposes, but also for trading purposes too. Moving on to Google right now. Google down about 1.14%, but, you know, they kind of deserve it, right? They deserve to take a nice breather. That being said, it was a nice daily uptrend, which we have since lost. Now the line in the sand remains 241. In the event we crack that further to the downside, you're looking for further daily downtrend and just further weekly consolidation, which is something that we were kind of anticipating on the channel over the course of the past 2 weeks as the RSI here on Google Weekly got really overbought to about 80, and now we just might be pulling pulling back. The next logical target, in my opinion, would be the 12 weekly EMA down here in the mid 220s. And that being said, it's the logical target because we really didn't set any support levels on the way up. So we'll kind of watch this one day at a time. Is Google still a good position, in my opinion, at these levels? At 245, it's debatable. If you have a 3 to 5 plus year time horizon for some shares, we can of course nibble on some shares, but let's be honest, the true area to buy, and I kept on harping about this on the channel for months and months and months, right? I kind of stopped buying relatively heavily Google as soon as it started cracking above 200, right? And also in terms of positioning for some call options, some leaps, things of that nature, that trade is largely played out by now. But if we have some nice extended consolidation, I might be interested again. That being said, at 245, the valuation is not crazy, but you can't argue that it's that cheap anymore. Moving on to Meta right now, Meta down about 0.05%. Meta's just really been struggling, right? Since last quarterly earnings, the 11% pop, we have done a whole bunch of nothing. No new all-time highs, some downswings, some upswings, but largely just range bound between 730 and about 795. So roughly about a 8% range right now. That being said, the bulls once again losing the daily uptrend, cracking the daily higher lows. So now they have to get it back. Now this is arguably a very wide sideways range of accumulation. And you can kind of see that a bit better on the weekly timeframes here, just doing a whole lot of nothing. This was a clear and very pronounced weekly uptrend, and that has since stopped. The bulls tried to go for it again, and now we're just tightening up at the top right now. Not the worst for Meta. We are just consolidating a bit sideways on the monthly, but same concept as a few other charts, right? Looking for some monthly higher lows. And trust me when I say, if somehow Meta makes its way down into the lower 700s, I will be buying a bit heavier into my longer term share position. As of right now at 743, it's not a bad stock to nibble upon, but in terms of swing trades as well, there is one type of swing trade that we can afford to do at this current time, using some of the lows previously established. I've done this trade last time that it was around here. We can set a stop loss below here at 720 and go for the upside break around 800. The risk reward is not that bad. Essentially what we're doing is we're just looking to play this range breakout, right? Looking to play the test of the 12 EMA, looking to play the back test here of the 730 area. Not a bad opinion, not a bad trade opportunity. It's a bit of a higher time frame trade in my opinion, and the risk to reward profile is quite attractive, right? If our stop is below 720 and our take profit is all the way up there for the breakout at 800, it's about a 2.35 R to R, which is not terrible. It's not the cleanest trade in the books, but at the end of the day, it is Meta, and Meta should be taken with an upward bias, considering the upward bias of the indexes right now and how bullish the rest of big tech is too. Moving on to Microsoft right now. Microsoft up 0.61, but this is another one that's not doing a whole lot of anything, right? Just consolidation for the better part of the last few weeks. Very nice tight range right now. The bears tried to flush these lows, 506, couldn't get it done. So we will see which area breaks first. Break it to the downside, sadly, daily downtrend, and of course, weekly consolidation just continues, and you'll be targeting the lows down there at about 491. However, the bulls have a chance here, right? Give me a nice break, 518 to the upside, and you might just be able to continue onto a new weekly uptrend. So we'll see if the bulls are able to do that. It's not looking terrible. We're protecting this weekly 12 EMA with our lives right now, but no swing trades on Microsoft for me. I do believe there are plays with a bit more momentum in them that could be more worth our time. And in terms of some share positions for the longer term portfolio, not for me right now. Above 500 bucks, the valuation is a little bit too high for me. I built most of my Microsoft position all the way down there. Obviously, if this one was part of just a like monthly DCA for, you know, long-term holding purposes, like 10, 15, 20 years, sure, we can always nibble a little bit. But in terms of building a new sizable position up here, it's not the best location, let's be honest. Now, moving into Netflix next. So Netflix down about 0.35%, and once again, we're just trapped in this range again, guys. 1210 at about 1185. We've been talking about this range for the better part of the past, month and a half at this point in time, and it just continues. You're still looking for the bulls to kind of get some momentum to the upside and kind of crack this area right here, 1245, to really give them the weekly uptrend that they've been looking for. Nice consolidation range, though. At this current stage, we're just in monthly consolidation as well. And I've been very firm in saying Netflix for me becomes a buy if we really crack down into the low 1100s. 1100 down to 1000. I'll probably be adding a couple more shares, but up here, in the 1200s, just a little bit too high for me to build a sizable position if I were new to the stock or something like that. That being said, the future upside for Netflix is very clear in my opinion. Management's target, I'll reiterate, for 2030 is about $1 trillion in market cap, so it could be a nice 2x over the next 5 years. Moving on to NVIDIA right now. NVIDIA, not too bad, trying once again to break above the infamous 182, 183 highs. We will see if they can do it, but the price action is definitely not looking too bad at all. Very nice daily uptrend, nice momentum into the highs, looking very good. This one, for quite a few times, was a very nice proposition to be selling some puts under the support range into the 160s, and I have been doing that quite often myself, I would admit. NVIDIA right now, is it a buy? Is it a sell? In my opinion, it's just a hold and or a buy, but a buy being a little bit of a nibble right now because it's at the top end of the range. Down here was a bit more of an aggressive nibble for some shares. That being said, at 175, the valuation is not terrible, right? It's trading at a 40 price to earnings, but if you look at next year, it's actually high 20s. The PEG ratio is a 1.71. So the stock is not extremely highly valued right now. And as a result, I do believe there can be some very nice upside. Of course, the next upside on any range breaks would be about 200, looking very good. And of course, if they do the infamous breakout retest, that could be a very nice swing trade attempt. If you are unable to get it at the lows, that would be the next type of pattern that we would be looking for some possible swing trade longs type of thing, yeah? Into Tesla right now, Tesla up about 0.64%. Not the worst day for Tesla. They did report deliveries, they will be reporting deliveries on the 1st of the month. So in just a few short days for you guys. That being said, moving on further, looking very nice in terms of price action, guys. Daily uptrend break, really healthy for Tesla's chart right now. In terms of the weekly, we are a little bit extended coming into weekly overbought conditions. So in the event that deliveries are a little bit disappointing and we take advantage of that to consolidate a little bit, I want everybody to focus on this back test here. 406 down about 386. Back test would be a very nice swing trade entry for some longs. Tesla benefiting, of course, from the rate cuts, which could lift the entire auto sector over the next 12 to 24 months. Could breathe some new life into Tesla. Of course, we had the Elon Musk $1 billion worth of buys of shares recently, so that obviously helped. But in terms of just technical patterns, we'd be looking for kind of the retest for further continuation. No current swing trades on the table for me on Tesla right now. Moving on to Palantir. Palantir, 0.73% to the upside, but really not breaking above to a new level, right? Just natural consolidation mode. The line in the sand right now, 174.63. Break that to the downside without any new highs. You're looking just for a week daily downtrend into a bit of weekly consolidation, right? The bulls had a really nice bounce from here, the whole 148, 149 section, and now we're kind of just stuck, right? And of course, it's not the best area to build some swing trade longs, in my opinion. If we're holding for some long-term shares that we've had for a while, I don't necessarily see any reason to sell, as Palantir is continuously getting new contracts. Although the valuation is very high right now, the company has still some phenomenal growth prospects on the table. And in the event we do break down, I'll remind you, the next area to possibly backtest on the weekly would be this 12 EMA 165, which also is in line with the infamous area of a support that we built not too long ago. So pay attention to that 165 backtest for any swing trades. It would be a better location in my opinion. Just looking for maybe some like a tightening range like this, and then eventually maybe a breakout closer to their earnings presentation. Moving on to SOFI right now. SOFI down 1.54%, cracking below the 12 EMA. You got to pay attention to these, right? Because SOFI bulls have not really lost this 12 EMA in a substantial fashion over the course of the past 2-3 months. We've cut it a few times, but every time we tend to get it back really quickly. If this time is different, and we move into a daily downtrend and loss of the 12 EMA, it will be weekly consolidation. But in my opinion, very healthy weekly consolidation. The weekly timeframes were overbought, and we have a beautiful location back down here, 2450 all the way down to about 2250, which of course would be the infamous 2021 high areas. So you guys know the drill. If we come all the way back down there, it'll be a beautiful area to reload some swing trade longs. And on any volatile red days, what I've been doing so far is I've just been selling some puts down here. If they want to come pick me up, no problem at all. I'll take the shares. If they don't want to come pick me up, no problem at all. I still have many shares that I bought all the way down in this low period down there. And I'll just be very glad to collect the short put premiums. Moving on to Uber right now. Uber trying to break above the $100 mark, but still no close above the ever elusive $100 psychological level. That being said, we're not looking too bad here in terms of price action. It is a very nice daily uptrend right now. And also on the weekly, it is a very nice weekly uptrend too. That being said, if we cannot get it done again and we choose to break down lower and unwind, well, this next area here could be a very nice area for a reload for some possible swing trade longs, or maybe even some longer term portfolio shares. Backtest of 93.50 down about 90 bucks. Valuation is pretty good down there. Technical area is pretty good for a bit of a retest too. So looking quite good in all aspects for Uber stock. And lastly, TSM, good old TSM. So right now, down about 0.05% on the day. We started off a lot higher and now unwinding. However, there are a few little issues with this chart. And number one is the fact that we are a little bit extended here on the weekly time frames. If you pull it up, you'll see that we are weekly overbought conditions on the RSI. That being said, if we do pull back, I do believe it's going to be a phenomenal reload area, especially if we can pull back to like the 250 location, which is the weekly 12 EMA. Prior resistance highs as well. Could be a very nice backtest of support. So although the daily time frame right now is choppy, although the bulls are in control, I'll be looking for any extended pullbacks on TSM to possibly further build out some swing trade longs, or maybe even sell some put options all the way down there. But fantastic company with fantastic growth prospects through the end of the year and even into 2026 as well. It's just a little bit extended after its most recent 5 weeks worth of rally in a row. So that wraps up everything we had for our overall market rundown. I spent a lot more time on the charts, especially on the indexes, some of the rotation and some of the plays that we might be able to find in those respective indexes. Hopefully you guys enjoyed that. Now let's jump into everybody's favorite section, which is the biggest gainers and losers of the day. All right, so first we're going to take a look at the losers of the day. Number one here on my chart is Resolve. So Resolve could be a very interesting play, but I showed you guys how to play it last week overall. We don't have to play this one with too much size, but we can be going for some possible swing trade longs. Backtesting some of the $5 down to $4 range could be somewhat of an interesting play for some follow through. Retail fan favorite out of the current time, but as I showed you guys last week, right? There's a few ways to play this, and we don't have to play it too heavily. So take a look here. If we want to build out something, if we take a look at the call options, you'll notice that a lot of the call options are still very juiced. If we wanted to go for some leaps, around the $10 mark, all right, they're still around $3 a pop. Now, there's a different way to play this one, right? We can always build some debit spreads on the cheap. We can build something like let me just expand the options chain for you guys right here. If we wanted to build some debit spreads super cheap right now, we could do something like this, right? You could buy the $7 call and sell, I don't know why. Oh, it's because I'm on the wrong account. Let me just switch my account and then that message will go away. Awesome. So if you just build some debit spreads on the cheap, you'll see that we can build a $7 to $12 call debit spread. It's only going to cost us something really cheap, right? Like 50 cents. And the upside is like $5 a pop. So that's a very good risk to reward profile in the event we didn't want to buy natural calls. And the same thing can be done on other very volatile stocks like Open Door. It's a very easy and cheap way to be building somewhat of a lottery speculative position. But I don't mind playing Resolve for a bit of momentum follow through now that it's been consolidating after a massive rally. Taking a look at Instacart right now, down about 10%. Now, I'll be the first to admit, guys, even though this one is down 10% coming into support right now, at about 39 to about 35, I don't particularly want to play it if I'm being completely honest. And the reason being, there's just too much competition right now in the same-day delivery space, something that Amazon is moving into in terms of same-day delivery for groceries. So Instacart, it's not an international brand, the likes of which Uber is and other major companies are. So Instacart, unfortunately for me, is a pass. I'm probably not going to be playing it, even though it's down. Open Door can be similar, can be something similar to kind of how we built on Resolve. You can build some call debit spreads all on the very cheap for some possible upside continuation, or you can do that what we've been doing on the channel often, which is additionally selling some puts below the market. $7 down to $6 range where some of these weekly moving averages are could be very interesting, as it does still benefit from some macro tailwinds. Open Door obviously has ran a ton, but if this one becomes the kind of meme stock / recovery stock of this current cycle, I wouldn't be surprised if this one can eventually hit something like a $15 target. Moving on to Kava. Kava down about 6.15%. And this one is additionally for me is kind of a no touch, right? Not the biggest fan of Kava. if I'm being very honest, I would rather buy Chipotle currently at current support ranges, $40 down about 35.67. So that being said, Chipotle for me, decent opportunity, right? Not the best opportunity, but a decent opportunity for a bit of a swing trade long with a stop loss below 35, and then you're targeting re-expansion back up to around 50. Not the worst risk to reward profile, about a 2-to-1 at this current stage. Kava, just a little bit expensive for me, for my liking. That being said, the company's currently worth about $7 billion. Price to earnings is expensive. You can make an argument that for price to sales, it's not that bad. The company will be bringing in about $1 billion, you know, even a 1.5 billion in 2026. So it's like about a 4 to 5 price to sales right now. So on that metric, it's not that bad. But if I had to do one of the two, I'd probably be going with Chipotle. Vistra, we already talked about. I really enjoy this opportunity, especially selling puts down here in the 180 to 170 range, or building some longer term positions here for the expansion of the energy sector. Klarna is something that I'm not personally going to be playing. I am personally preferring to play something like an Affirm. Affirm, very attractive sell put opportunities down here. It was on the top 5 options play of the Sunday video, and today was a great opportunity, guys, to sell some put options down here. 70, 69, 68. They were available for a better part of the morning right now. I prefer Affirm for a couple reasons. Number one, because they're a lot better in terms of creditworthiness of their clients. Their default rates are a lot lower. And just overall, guys, they have better merchant partnerships that are more accretive to the business, in my opinion, as opposed to something like a Klarna or something like a Sezzle. So Affirm is probably my favorite buy now, pay later play of them all. So I will not be playing Klarna. A couple other ones of interest, maybe. Intel, I'm a fan, the same as I was playing it back here on the back test. I might be looking to play it again. So if Intel shows some weakness and we sell off, could be an interesting opportunity to sell some puts down here. And as I was saying previously in last week's videos, if we wanted to play Intel to the upside, guys, there's only really one way to do it. Because the in-the-money call options are somewhat expensive right now, the volatility is a little bit higher. If we take a look at some plays on Intel, this is not a recommendation, of course, but if I wanted to play Intel for the expansion of the thesis into maybe like a March 2027 or something like that, I'd probably go for something like a $40 call option. Buy 1, 2, or a couple, however many you really want to put into this play, and just kind of sit on them, right? It's a lottery play. It's a thesis expansion. You got the US government investment. You got the NVIDIA investment. So obviously we know Intel is a very long recovery story, but it has now cracked a very nice shelf of support. So if I had to build some trades, they would be from here all the way down into support for some back tests in that lower 30 area. And that's pretty much all the ones that I wanted to cover to the downside. Shout out to booking.com. Booking.com, in my opinion, is a phenomenal area to be accumulating some longer term shares. Fantastic company, just monthly consolidation right now. So here all the way down into the lower 5,000s, very decent opportunity for some longer term shares. I have this one in my own long-term portfolio as well. And now we got to talk about all of the companies that are booming to the upside. Now, Etsy up 16%. Now, full disclaimer, guys, I'm probably not going to be playing Etsy. However, very decent. Of course, it has to be with an OpenAI ChatGPT partnership for instant checkout purposes, right? So that being said, coming into resistance right now, 79, down about 66. Maybe it'll help them increase sales, but Etsy sales, I mean, it really hasn't been doing too well recently, guys, especially out of 2022. As you can tell by those analyst price targets, EPS is kind of all over the place, should be improving the next few years. And revenue's just really been flat. So maybe the ChatGPT partnership will be accretive to the business, but I do believe there's other better bets in this niche right now. Robinhood up 12.27%, very strong move off of this news headline right here. 9% up, driven by a 98% increase in crypto revenue to 160 million and 2.3 million new funded accounts. So Robinhood stock continuously pushing the bounds of gravity right now, just not staying down for too long and pushing for one leg higher. Very tough to chase this one up here. If anything, we were talking about this one down here to where there was some swing trade opportunities with some stop losses below the 90s when we were in the low 100s for some expansion back to the all-time highs, 120, 130 psychological. Those targets have now all been hit at this current time. So very tough to position for Robinhood. In my opinion, this one is not a buy. It's not a sell. It's just a hold for me right now, as the valuation is very, very rich for a brokerage house. Moving on further, Talking about Iris Energy, the stock that it seems that every day is up 5, 6, 7, 8, 9%, right? And we were talking a lot about this one in the most recent few weeks. This one as well for me right now. It's a trim in terms of profits, but it is also a hold because the valuation on this one is not terrible. It's a $12 billion market cap, but if you take a look at their longer term thesis here, you will see that these sales projections into 2027 are 1.53 billion and thereafter 2.22. So for holding this one for the longer term expansion into the next few years, then the thesis definitely still makes sense because at that point for 2028 sales, it's only trading at a 6 price to sales. So although it's rallied a ton, it does make sense to hold, but starting huge positions all the way up here, thinking you might get the exact same growth that people that have been in since the teens have been getting, probably not the best proposition at all. If anything, if you want to play the volatility, any big red days could be some nice opportunities to maybe sell some put options down here into a much more manageable 30s area. Coinbase rallying off of the Robinhood news, of course, as well. So that being said, this one up 7%. Now, this one is not a bad swing trade opportunity in my humble opinion, guys. Perfect back test down here, 310 at about 295, and we can establish a very easy stop loss location for a bit of a wider swing trade, right? That being said, where's the take profit right now? It is all the way back to the all-time highs, 440. So this trade will take some time, but it could be a juicy one. 292 would be the tentative stop loss area. I know it's wide, but the profit target is also wide as well. Essentially what you're looking for here, guys, is you're looking for the higher time frame expansion. It's about a 2.7 risk to reward. You're looking for the monthly re-expansion of this trade, right? Beautiful expansion move. Back test for a bit of a cup and handle pattern formation right here. Looking for the expansion again. Not terrible, either this one or even something like an MSTR. MSTR not looking too bad either, right? This, once again, is Michael Saylor when he used to work at McDonald's. Sorry about that. I kind of keep it on the chart right there. MSTR not looking too bad at all, guys. If we're looking to play a Bitcoin proxy trade to the upside, looking quite good, and I do have skin in the game in this one myself in around the lower 320 levels. If you take a look at AppLovin, phenomenal company, guys. However, right now, very overbought conditions. Very tough for me to say that this one is a buy up here. Now, it's also not a take profit because I do believe the company will be showing extreme growth in the next few years as we covered during their earnings in the August period of time. But right now, it's probably not the best location to be starting an initial position. You got heavily overbought conditions on the daily timeframes. You also have overbought conditions on the weekly timeframes. And the monthly chart looks like this. So there's really no position to be had right now. Phenomenal company though, and if I were a shareholder, I'd be very happy holding some of my shares, but maybe not buying any new shares right now. Onto a company like Shopify. Shopify hasn't made this list in a while because it's just basically been consolidating and doing a whole lot of nothing. But when we covered them after their earnings, we saw a company that was growing extremely fast in terms of revenue and EPS, but also a company that at $150 is starting to get a little bit expensive. So this one, again, is not a company that I would be going all in right now. It's fine for a nibble, but the best is if you're already holding stock. This one largely for me is a nibble and or a hold. No real swing trades for me at this current time. The stock is quite extended on the monthly time frames. I'd be a bigger fan of waiting for like a 120s pullback, but it doesn't seem as though it's going to happen. But that's fine, right? If I don't get my levels for entry, there's tons of other companies that we can be playing as well. We can talk as well about BMNR. BMNR, in my opinion, nice company to be selling some put options down here in the mid 40s, which is something that I did again. I do believe this might be the best performing ETH treasury out of all of them. So I will be positioning in BMNR, not looking too bad. Trade Desk getting a little bit of a candle off the bottoms right here. We talked about this one a lot, especially after their earnings, right? And we were commenting that even at $50, guys, the valuation is not that cheap. You would expect it to be really cheap, right? It's just not all that cheap. To give you an idea, right? The company's trading around the same valuation as AMD. And AMD's earnings growth and revenue growth will far outpace that of Trade Desk. And keep in mind, Trade Desk is now competing with Amazon. So this one, in my opinion, is a lottery bet at best or a bit of a swing trade. Stop loss would be down below the lows, 42. And to the upside expansion, you're looking for about a 60. So not a terrible trade opportunity, but not a stock that I'd be adding to my long-term portfolio because of the competition with Amazon. That being said, other names such as Circle, we keep saying down below here, decent area of accumulation because the bull and base case scenarios do give us some very decent share price appreciation to the upside, and also not a bad company, to be selling some put options down here into the mid-1 teens, not looking too bad at all. Celsius Holdings, we talked about it last week, that this area was a beautiful area to be selling some puts and or building some swing trade longs on the back test initially, and then they're in the area. And we weren't able to get too many shares out there, but the ones that we did get are looking fairly good right now, looking for some upside continuation into this beautiful weekly uptrend at 55 bucks. The valuation of Celsius Holdings is not the cheapest, but it can be justified, especially in terms of the price to sales metric, which they will be expanding very nicely over the next few years. Price to earnings, not so much, because they don't have phenomenal earnings growth until the next few years, as you can see from this chart right here. But the revenue growth, especially with their acquisition of, Alani, and of course with their Rockstar holdings right now, also in the portfolio mix, will be giving them some very nice revenue lift here into the next few quarters and into the next few years as well. And the other stocks we kind of talked about already. Special shout out to PayPal. PayPal has just been an absolute dog of a stock, but one that I do enjoy playing down here with some short puts. But even for some swing trade longs, it's not the worst proposition. You have very clear support, and you would be looking for some expansion up here into maybe the high 70s to 80s. So the risk reward profile of those trades is looking quite good overall. And I think that's pretty much going to wrap up the video, guys, because if not, we can talk about every single stock on this list. And that's not the point, just to talk about the biggest ones or the ones that I'm paying the closest attention to. So that wraps up another video. Hopefully you guys enjoyed. If you did enjoy, consider dropping a like. Would appreciate it for the growth of the channel. Consider subscribing to the channel if you're new as well. Would love to have you back. And last but not least, if you have any questions, please feel free to leave them down below in the comment section. Or if you guys are looking at some stocks that perhaps I haven't mentioned, always feel free to leave them down below in the comment section. I always love hearing about what you guys are trading and what you guys are possibly investing in as well. And, oh, sorry, I had to show you guys the portfolio. So let's do that, I guess. So in terms of the positions, guys, very simple. In terms of last week, we had a very good week in the wheel. I'll just show you the weekly recap again. So as you can see right here on the weekly recap, it's a very nice wheel trades, a lot of profits made there. Additional wheel trades, which I labeled as lottery because they were a bit more volatile, a bit more aggressive, all performing very well. But we did get assigned 3 stocks, BITX, Amazon, and Nike. So that being said, guys, how are those assignments going right now? Well, we got assigned BITX at 52, Amazon at 222.5, and Nike at 70. So today we were able to manage those positions very well. Number one, what I had to show you guys is the BITX position. We wrote some very attractive covered calls, 54, so above my assignment strike for $2.14 for October the 10th. We're looking for 4% in premium for the next 2 weeks. Very solid. That gives us a cost basis on BITX down here of 49.41. So if we're called away at 54, we'll be making a lot of profit, almost 10% in a couple of weeks. On to Amazon right now, our assignment at 222.5. We wrote some covered calls today. As you can see, 222.5s for October the 10th, locked in a bit more time, a bit more premium for almost 2%. Very solid move right there as well. You can see the fill, and that brings us with an average cost on Amazon down here, 217.14. So if I get called away on Amazon, we'll be making a ton of profit on that wheel assignment as well. And then comes Nike. So Nike is a bit of a tricky one, and I kind of debated over the weekend what I wanted to do with this one because, of course, Nike has earnings tomorrow after the close. And we know that Nike has not been the best company for earnings so far. Several times in the past, their earnings have showed just lackluster numbers in terms of sales numbers and in terms of overall growth. But we do know that the CEO has a nice path for the company in the near-term future, such as rekindling their partnerships with wholesalers, such as Foot Locker, such as focusing on what once made the company great, such as large sponsorships for big-time athletes. And additionally, guys, focusing less on styles and focusing more on running innovation, the one thing that made them great. So they're focusing on those three things, but they're still dealing with inventory problems and, of course, problems related to tariffs too. So we might be seeing some price increases from Nike. That being said, the earnings expected move is probably going to be about 6-7%. You can see there's a very large gap down here, which we could revisit. The stock is currently daily oversold conditions. Now, I had to close this position, guys, but it's not for the reason that you think. You guys know me. I really don't care. I'll hold my assignments, I'll hold my shares, and I've been very vocal on the channel that I think that the 70 location for Nike is a very decent level to be playing this stock, but also to be holding this stock as well. However, keep in mind, guys, that when I trade in my Discord, I do not trade alone. I will show you guys how I labeled this one just front and center, right? I closed this one. We had a break even after assignment of 69.50. I closed it this morning, no covered calls, just sold the shares 69.44 for a 6-penny loss. A very small loss, of course, right? But the reasoning of the closure arguably matters more. So here's the reasoning that I gave my Discord while I was streaming live this morning in our channel. The reason I'm closing is because of risk management in relation to earnings this week. I know a lot of people are assigned and some people don't have either my risk tolerance or my patience or account size for this position. Keep in mind that I'm trading within the context of our group, right? As such, I feel the best thing to do for the group is to wind it down and sit out earnings on the sidelines. If you ask me my personal opinion, I think earnings should show a continuation of the recovery story, and the stock is already daily oversold. And if I had to take this trade alone with my own investor profile, I would definitely keep these shares and run $70 covered calls for this week and maintain the position until called away. Thanks for understanding. On to the next one. Essentially, what I was telling my group this morning, guys, is I could do the influencer thing, right? And just say, well, listen, these trades are obviously all for educational purposes. If you guys get stuck in the stock with me down there, I won't care, but you might, and that's entirely your problem because I never told you to copy the trade. But that's not very ethically correct, is it? I know a ton of people do it. Some people in the Discord said, listen, it's your trade, man. You should just keep it if you want to. But keep in mind, right? I always try to do the best thing for the group because I know a lot of people, of course, you're not supposed to do this, but a lot of people just blindly copy my trades. And I know, as I said in the message, not everybody has my risk tolerance. Not everybody has my patience. If I have to take a drawdown on Nike down here, I won't mind. You guys have seen me take several of those in the past. I'll probably even DCA the position, but I know it will bother some people, and some people also don't have my account size. Some people might have went also a bit too heavy. So when I have to take this decision, right, with earnings coming up tomorrow and knowing that earnings can be very volatile, I would rather sit this one out on the sidelines and reevaluate thereafter just so that everybody is safe, right? Just to be more conservative whenever I'm trading within the group and I have two decisions to make, either a very risky one or a more conservative one. I'll always take the more conservative one just to manage the risk and manage people's expectations. As you know, I'm just trying to be, as transparent as possible, right? And try to make the best decision for the group. Some people agree with that. They thank me for it. Other people say, listen, you should just trade your own style and whatever happens to other people, that's their problem. But I don't operate like that, guys. You know what I mean? I have a conscience as opposed to perhaps, other Discord channels that a lot of my members have been in to where people just say, well, it's your problem now, man. It was my trade, but I closed. I didn't even tell you guys I closed, or they're just kind of like shady with it. So I'm not that type of guy. So I just want to show full transparency there. That's why I closed Nike. But if I had to keep it, I'd keep it. The covered calls on this one for this week, guys, is super juicy, right? If you look at the covered calls for this week on Nike, they're super attractive. Even if the stock goes down, you probably make a ton of premium here just farming the wheel strategy down below. Look, it's about $3 almost for the $70 covered calls. Would have been attractive, but we will do it on a different day. That being said, the positions still in my portfolio. I don't know why we're down. Every time it seems as though my portfolio is down, it's because I have a lot of spreads here, right? And the spreads go, as you can see, they go back to zero and the spread really widens out. So we're not actually down $357 today. Matter of fact, we were up like $1,000 on the portfolio today overall. The account value right now about 54,400, making our way back to outperformance against the indexes after the whole tariff debacle, of course. And you'll see the same positions, right? Haven't changed anything. The long options stay the same. Still have the Oscar leap calls. They're performing well, 43%. Still the Sentinel-1 leap calls up 17% there. TLT is still a battle, but we're almost break even. The new big Visa position that is currently still about break even right now. Still a good time to enter. The XLV healthcare position still up about 10%, but not the best performer. I'll be honest. We got a lot of time on that one. In terms of the wheel position for this week, a lot of these, some of these, not all of them, but a lot of them were open last Thursday and Friday during some of the sell-off periods. A firm $70 puts, very strong. We're up about 41% on those. We'll see what happens. The call options we talked about on Amazon, BITX as well. BMNR, new trade from today. 45.5 strike, 32 cents. We'll see how this one goes. Oscar Health opened last week, 15.5 short put for 15 cents. It's now largely profitable. Resolve, $5 put for October 17th. We will see if we get assigned and we can get some Resolve shares, maybe ride them higher before writing some covered calls. Sentinel-1 got last week 17.5, same strike I've been talking about forever. 30 cents. They're now 60% profitable or more. SOFI, we got this one last week as well. 24 put for 15 cents. That one is now very profitable too. SOXL got this one last week, 24 puts for about 15 cents as well. They're now virtually worthless, so we'll be taking out of those maybe tomorrow. And USAR, a brand new trade from today. We actually got 10 cents, but they took away a bunch of commission right there. And we'll see if we get a sign on good old USAR. I've been playing that same range on USAR for God knows how long. Seems to be like 2 months at this point in time. It's the range all the way down there with some good volatility. So those are most of the plays. If you take a look at the longer leap debit spreads down here, you will see that I still have the AMD break even. I might be adding another one to this one. Amazon, it's been running well, but pulled back, of course, still up 33% on that one, open during the April tariff sell-off. CoreWeave currently acting very nicely for us, 28% to the upside, but this one has barely gotten off the ground just yet. We're already up this much. The risk reward profile on this one is fantastic. Moving on, we still have the NVIDIA. These FISRVs have been dead since their earnings. It was an earnings play. I'm just letting them be called away. I guess we'll take a tax loss on that one. Not too big of a loss, 135 bucks. Who cares? NVIDIA, this one was also an earnings play. Coming back right now. We're pretty much almost back to break even on this small call debit spread for November. Rubric, another leap call option play, debit spread, 77.5 versus the 140s for January of 2027. We're up 13.5% on this one. I still think it's a decent time to position on Rubric. We're not too late here. And lastly, SPGI, which is a new position that I opened last week. Just a small call debit spread, January. 510 versus 520, looking for some nice expansion. We paid about $3.60. The total profit could be potentially $10. We'll probably wind it down before then though. So those are all the trades in my portfolio. We have a ton of buying power on the table for the rest of the week. And as you can see, I'm not chasing the market. I'm just letting opportunities come to me. I'm always finding wheel opportunities every single week to utilize most of my buying power. And I have a lot of leaps with a lot of time, with a lot of upside potential on them. So that's the entire portfolio rundown. Hopefully you enjoyed that. And that now concludes the video. So hopefully you guys enjoyed. That's it for me. Take care. I'll see you guys in tomorrow's market update. Have a great day in the markets tomorrow. Peace.